Hi, I'm Andy Mattingly with your financial readiness discussion regarding 10 changes you might need to make in your financial life to achieve the success you desire. The following 10 moves are actions that can last your entire lifetime. The sooner you implement these plans, the better your chances of achieving the success you desire will be. Eliminate every high interest debt you have. Imagine if you had no debt at all. Your student loans, credit cards, car loans, and even your mortgage were instantly paid off. This scenario is not likely for very many people, but the reality is that eliminating your high interest debt is the most important thing you can do. If you focus on any debt with a rate above 9%, you're going to eliminate one of the biggest drains on your financial resources, because high interest rate debt that is left to linger only costs you more in the end. It also goes without saying you need to avoid adding additional high interest rate debt. If you have multiple high interest rate loans, attack one debt at a time, and as each one is paid off, add those funds so you can speed up the payment of the remaining high interest debt. Build a healthy and perpetually growing emergency fund. There are a variety of emergency funds that you really need to build and continue to grow through most of your life. Starts with a medical emergency fund, and if you have access to a health savings account, this is the best place to build this fund. You also need a short-term emergency fund, one you tap for unexpected mechanical costs, home repairs, or even covering insurance deductibles. Finally, you need a long-term emergency fund. This is for catastrophic issues, including loss or reduction of income. This is the fund that helps you cover your regularly monthly expenses if you experience one of these major issues. For the latter two emergency funds, start with an insured account. If you're able to build a significant sums, you might want to move to some of the longer term funds to other investments, as long as you don't take on too much risk. Start saving for retirement or bump up your retirement contributions. There is likely no other financial goal as important as saving for retirement if you want to stop working. Starting early is the best way to achieve the freedom of choosing when you want to retire. The second priority is to make sure you're saving at least 10% or more of your income as quickly as possible. These are the two best ways to ensure you can build the assets you need for your retirement. Where should you build this retirement fund? Your employer, if they offer a workplace retirement solution, is always the best option, especially if they offer a match. If there are matching deposits, you really need to consider starting your contributions at the matching amount. Anything less is leaving free money on the table. Eliminate regular bills that aren't giving you enough value. This may seem daunting at first, but if you take a purely economic approach to all of your regular bills and subscriptions, you might find items that can be eliminated. For example, are you really using the gym membership? If not, end it. Other places to look are streaming services and subscription services. If you don't really listen to music or watch a particular content streaming service, cancel it right now. You can always reactivate if your life changes or you feel you're missing anything that you canceled. One out-of-the-box bills to eliminate is your car. If you're a two-car family, you might not really need both of them. So if you can exist with one, you eliminate a car payment and insurance and registration fees. Doing this purge once or twice a year is a great way to keep these types of expenses from building. Make a serious effort to reduce every regular bill that you didn't eliminate. Maybe you decide you need cable, but do you really need all the channels? You might also be able to reduce your cable bill by eliminating extra channels that don't bring value to you. Also consider home or renters and auto insurance renewals. You might be able to reduce costs by going with a different provider or making changes to your current coverages. Mobile phones are another important area to research and find the best plan for your needs. If you have loans that are not part of your high interest payoff plan at this time, consider refinancing to a lower rate, but don't change your payment. This provides a quicker payoff timeline for a huge benefit. Go through your statements and figure out where every dime of your money is going. Not all of your spending is in the form of monthly bills. In fact, most of your spending is probably on discretionary spending at places like online shopping sites, grocery stores, eating establishments, and other retail stores. The first step is to look at several months of statements and put your expenditures in distinct categories so you can determine how much you're really spending each month. You might be surprised how much you're spending on certain expenses because the amounts are small, but the number of times you make the purchase is frequent. This information allows you to make smarter spending decisions and find a true way to reduce your discretionary spending. Systematically improve your shopping and spending habits. Oftentimes, when we are told we need to lower our expenses, we look for ways to completely cut out expenses. For example, It might be never getting a premium coffee again. This method is hardly ever successful because very few people are able to completely give up something that they enjoy. A better way to achieve expense reduction is to focus on having better money habits. This means doing more comparison shopping to find the best price on everything you purchase, not paying for convenience just to save time, and most importantly, avoiding impulse purchases. Another important habit is always shopping with a list, from buying groceries to purchasing gifts. Lists generally keep us focused on what we need to buy, not on what we want. Break up with expensive hobbies and life routines and seek out others. This can be one of the most difficult changes to make because this is the area where we feel we've earned the right to spend what we want to spend. Hobbies and activities have to be balanced between how much of your income is required to be involved with how much fun you derive from doing this activity or hobby. For many, it might just require balance. For example, if you really love antiquing, you might need to set a budget on how much you spend, or if golf is your go-to activity, you might need to play less often or play at less expensive times or less expensive courses. Expensive hobbies or activities, you really need to challenge yourself to try new things that are less costly. Sometimes you'll find a new adventure more exciting, and it makes reducing or giving up your costly hobby much easier. In the end, you'll be happy with the change because you will have discovered something new and also made a smart financial decision. Make a realistic plan for the future, then figure out what needs to change. Every year or two, build a plan for what you want your future to be like. You should look 5, 10, and even 15 years out and develop an idea of where you want to be professionally, personally, and financially. From these different scenarios, start building a list of major steps you need to make to achieve your desired future. This list is then the basis of your roadmap on how you can achieve your desired goals. This is a great opportunity to uncover what needs to change in your life to reach all of your goals. You might be surprised how much financial change you need to make to reach your personal and professional goals. If you don't have a destination in mind, you might not end up where you really hoped you would be in 5 or 10 years down the road. Doing this every 2 years or so helps you replot your course as your priorities change. Invest in yourself and build your career plan. Constant learning, either formal or informal, is extremely important to move yourself forward in your career. And knowing what you want to attain in your career can provide the guidance on what this learning should encompass. As you build your career, also build your personal and professional network. Find formal or informal mentors who can provide insights and advice as you manage your way forward. These relationships should continue all your life, and you should continue to add to your professional network until the day you retire. Your career growth plays an important role in realizing your financial dreams and is every bit as important as other financial changes mentioned before. Start today by incorporating these actions into your life. You will appreciate the outcome if you successfully implement these ideas. Financial readiness is attainable for everyone, and it all starts with your commitment to reach this goal. To learn more and find helpful tools and resources, visit the Financial Readiness page at forumcu.com or check out other videos on the Forum Credit Union YouTube channel.